Hello millionaires, welcome back to the YouTube channel, the best place for you to learn and share about budgeting, saving, investing and all things financial literacy. My name is Gertrude, and in today's video we're going to go through investing in real estate without owning property. Now you might be wondering, what is she talking about? How can you invest in real estate without owning property? Well, I am talking about real estate investment trusts, that is REITs. So what are we going to go through? We're going to go through 1, the definition of REITs, real estate investment trusts; 2, why you should even consider investing in REITs or the benefits of investing in REITs; 3, the types of REITs in Kenya; 4, the structure of REITs in Kenya; 5, how you can invest in REITs in Kenya; and 6, the risks involved in investing in REITs in Kenya. Now, before we go on, I'd like to mention that you can skip over to the section that you find most interesting. There is a timestamp in the description box below. So let's get right into the video. In other parts of the world, REITs were introduced in the 1960s and 70s, but in Kenya, REITs were launched in the year 2013. So what is a real estate investment trust? In a nutshell, a REIT is a collection of people's money that is used to invest in real estate, much like a unit trust, for example a money market fund trust, whereby people pull their money and this money is used to invest in financial instruments. As for REITs are used to invest in real estate, that is buying and selling property such as apartments, commercial buildings, hospitals, malls and so on. So why should you consider investing in a real estate investment trust? Right. Now I have 5 reasons why you should consider investing in a real estate investment trust. Now the first reason is that as an investor, you will get regular, predictable, passive income. What does this mean? This means that as an investor, you will get regular, predictable income in form of dividends. For example, REITs are required by the governing authority to pay out 80% of their net income to investors. Now the predictability part comes in when you know that each and every year you will receive that income in form of dividends. On to the second point, why you should consider investing in REITs. Second point is liquidity. Unlike traditional real estate, whereby the sale of property can take a long time, as an investor in a REIT, you can get your capital back by selling off your shares. The third point is that you will get professional management, whereby as an investor you do not have any landlord responsibilities such as buying the property, financing it, managing it, doing the accounting and so on. As an investor, all these responsibilities are taken care of by the REIT managers. The fourth reason why you should consider investing in a REIT is that there is low minimum investment or capital. For REITs are listed on the NSE, you can invest as low as 1,000 bob. Fifth reason why you should consider investing in REITs is that REITs are exempted from double taxation. Now what this means is that registered REITs do not pay income tax but are required to pay withholding tax on the income earned in the form of dividends. What this means for you as an investor is that you will get more from your investment. You will earn more from your investment. Now on to the next part of this video, which is types of REITs in Kenya. Now the first type of REIT in Kenya that we will discuss in this video is the D REIT. Now the D REIT, also known as the development REIT, build and sell property. Now what does this mean? This means that they build, that is to develop, and sell off the property. An example of a D REIT in Kenya is Akon Students Accommodation, Akon D REIT. The second type of REIT in Kenya that we will discuss in this video is the I REIT, that is the income REIT. As for income REITs, they acquire property and rent it out. Acquire, that means buy property then rent it out. The main source of income for I REITs, income REITs, is rental income. Now two types of I REITs in Kenya is the Akon I REIT and the Ilam Fahari I REIT, formerly known as the Stanbill Fahari I REIT. Now on to the fourth part of this video, which is the structure of REITs in Kenya. Now at the top we have the Capital Markets Authority. This is the governing body. The Capital Markets the CMA, the Capital Markets Authority, licenses, monitors and supervises REITs in Kenya. Now after CMA, that is the Capital Markets Authority, we have the promoter. Now the promoter is the individual or company that approaches CMA with the idea of setting up the REIT. Now the promoter approaches CMA for approval of setting up the REIT. Now after the promoter we have the trustee. The trustee is most oftenly a bank. This trustee holds property, the real estate assets, on behalf of the investor. Now I have to mention that the trustee must also be approved by the Capital Markets Authority. Now after the trustee we have the REIT manager. Now the work of the REIT manager is to provide management and fund services to the REIT on behalf of the investor. That is, the REIT manager sets up, monitors and disposes the REIT on behalf of the investor. Now the REIT manager also has to be approved by the Capital Markets Authority. Now after the REIT manager we have the property manager, who maintains and leases the property on behalf of the investors. Now I have to mention that the REIT manager and property manager both charge management fees. Now below the property manager we have the service providers. These are people like lawyers, advisors, people who provide professional services to the REITs. Now that's it for the structure of REITs in Kenya. Now onto the second last part of this video, which is how you can invest in REITs in Kenya. Now there are two ways that you can invest in REITs in Kenya. I'll discuss one method in this video. The other method, you can get it in the article. I'll attach an article in the description box below. Check it out. Now the first method on how you can invest in REITs in Kenya is investing via the NSE, that is the Nairobi Securities Exchange. Now as for this method is similar to investing in shares on NSE. Now at the time that I am making this video, there's only one REIT listed on the Nairobi Securities Exchange, that is the Ilam Fahari REITs. Now the first step is to open a CDS account. A CDS account is like a cloud for your shares. So this account is free, you can open it. Yes, after opening a CDS account, you have to choose a broker. Now a broker is an intermediary, that is someone who will buy and sell the shares on your behalf. Now there's a list of registered brokers. I'll leave a link in the description box below, so check it out. Now after choosing a broker, the final step is for you to instruct your broker to buy the units on your behalf. Now at the moment, the minimum number of units that you can buy are 100. For example, if the unit price at this moment is 6.40, you need around 640 shillings for you to buy the units of the rate that you want. Now before we go to the last part of this video, I'd like to remind you to hit that like and subscribe button. So hit it now so that you do not miss future videos from this channel. Now on to the last part of this video, which is risks involved in investing in REITs in Kenya. I'll mention four risks that you'll be taking on as an investor in a REIT. Now I have listed 7 risks that you will be taking on as an investor in a REIT in Kenya. There's a link, there's an article that I have linked in the description box below. You can check it out. Risk number 1 is that you can lose your capital. That is, there is capital loss risk. For example, the Elam REIT, back in 2015, it was trading at 20 shillings, but it dropped. Right now it is trading at between 6 and 7 shillings. The second risk is that there is lack of diversification. That is, REITs in Kenya are required to invest 75% of their capital in real estate only. That means when the real estate sector is not performing, the real REITs will not perform as well. Now the third risk is that the REITs in Kenya have slow growth. This is owing to the fact that REITs are required to pay out 80% of their net income in form of dividends. This leaves less than 20% for growth and expansion. Now the fourth risk that I will mention in this video is high professional fees. Now the REIT managers and property managers charge high management fees, which eat into the investors' earnings. Now that's it for this week's video. If you learned something new, subscribe to the channel and share this video. Now because you've made it this far into the video, comment the word banana so that I may know that you have made it this far into this video. Now that's it for this week's video. I'll see you in the next one. Bye.